All right, hello and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer how we start each of these podcasts. Nothing in this video or any of our other materials should be taken as investing advice. That's especially true on this channel because we're going to be talking about some of the more high risk stocks in the stock market. So just make sure you do your own work, consult a professional before making any investment decisions. All right, with that being said, the topic of today's video is going to be a few stocks that have skyrocketed since Nvidia disclosed a stake in them last Thursday. So of the stocks that Nvidia announced a stake in, one of them, Too Simple, has already been delisted and is on the brink of bankruptcy. So we're not going to talk about Too Simple. But James, you want to talk about what's so interesting about SoundHound AI and Nanox?
So you can see this news article here. AI firms surge after Nvidia discloses stake, and Nvidia filed a Form 13F, which is shows all of the stocks that they own, basically. And any company that owns more than $100 million worth of stocks is required to file a Form 13F and disclose all their positions. And recently, Nvidia bought $150 million worth of shares in ARM Holdings, and that put them above that $100 million threshold. So they had to disclose all of their holdings. Now, all of the holdings besides ARM, Nvidia actually made these investments a long time ago in some cases. So in the case of both NanoX, SoundHound, and Too Simple, Nvidia made these investments years ago, but they only just disclosed it in their 13F recently because they finally surpassed the $100 million reporting threshold. And if we look at the sizes of the investments, so the investment in ARM is quite big. At the time of them filing this form, it was worth $150 million. There's another one called Recursion Pharmaceuticals, which is also a pretty big position at $76 million. But the other ones are tiny. So NanoX Imaging, NVIDIA's stake is only $380,000. And then for SoundHound and Too Simple, their stake's only about $3 million each. So these are really tiny numbers compared to NVIDIA, which has an almost $2 trillion market cap. But it's important to note that just because these NanoX, SoundHound, and Too Simple, they're such minuscule values now, but part of that is because NVIDIA's original investment was much larger, but the values of these stocks have declined so much that NVIDIA's positions are now pretty minuscule. So we'll start off talking about SoundHound. So there's SoundHound AI. So NVIDIA invested in SoundHound all the way back in 2017 while SoundHound was still private, and this was reported in the media at the time. In 2021, in 2021, SoundHound went public by merging with a SPAC. And in their SPAC presentation, they bragged about the fact that NVIDIA is a strategic investor in them. So it's been well known publicly that NVIDIA is an investor in SoundHound. But then once it was disclosed with NVIDIA's 13F a few days ago, well, that caused a huge amount of excitement and the stock surged, which is obviously ridiculous because we're just receiving information that we already knew. But that's just kind of how penny stocks work. They can trade in sort of irrational ways. But other than the share price action, I think it's also worth digging down into the fundamentals of how is SoundHound doing as a business. So SoundHound, they create an AI-based voice assistant. You can think of it as very similar to Amazon's Alexa. You can talk to it, and they have a speech recognition thing. And then it has a speaker, and the SoundHound thing can talk to you. It's basically just like Amazon Alexa. So they have two main end markets that they sell their voice assistants to. One is fast food companies. So I think they are at places like White Castle and Jersey Mike's and some of these fast foods. And the fast food company can put the SoundHound voice assistant in the drive-through. So you go through the drive-through, and instead of giving your order to a real human, you give it to the SoundHound AI voice assistant. Similarly, when you go inside the restaurant, they can have a tablet where instead of pressing buttons to order your food, you can talk to it. You can talk to the tablet, and then it will recognize your speech, and then that you can order your food verbally. And secondly, they also sell their voice assistants to automotive companies. So in some automobiles, the infotainment system will have an AI voice assistant. And for some companies, including Kia is one example of one of their customers, um, they um, they license that voice assistant from SoundHound. And for these technology companies, one of the most important things to look at is the competition. So, in the fast food market, it is very competitive. There are other competitors. Presto is one example, basically does the same thing as SoundHound. On the automotive side, it might be even more competitive. So some automakers like Toyota develop their own AI voice assistant in house. Amazon Alexa also licenses Alexa to automobile makers. For example, GM uses Amazon Alexa in a lot of their cars. And also, there's another company called Cerence, which is a publicly traded company. It's far larger than SoundHound, and they also make AI-based voice assistants. BMW is one of their customers. So it's a very competitive market. And so, as we talked about earlier, they have two primary end markets: fast food and automotive. And if we look at their revenue by geography, we can get some, pretty interesting insights because they don't disclose their revenue by end market, as in fast food versus automotive, but they do disclose their revenue by geography. And if we look at the 9 months ended 2023, which is the most recent we have data for, their biggest country by far is South Korea. Their second biggest country is Germany. And then their third is United States, then France, then Japan, then France. And then so it's kind of surprising that SoundHound is a U.S. based company. How do they have so much business in South Korea and Germany? And what I believe this is because all of these countries that they have significant revenue from are all countries with large automakers. So there's like Hyundai and Kia in South Korea, and then all, like BMW and Mercedes and such in Germany. And so these are all automaking countries where most of their revenue is from. So that leads me to believe that the majority, probably the vast majority of their revenue comes from automotive, and um, only a relatively small portion comes from fast food. And if we look at this chart on the right here, it shows the change in revenue for the first 9 months of 2023 versus the first 9 months of 2021. So how much has revenue grown? How much has revenue grown over the past 2 years by each of their geographical segments? And we can see that pretty much all of the growth that they have experienced, like $13 million of revenue growth, has come from South Korea, while Germany, United States, and Japan have all actually decreased in that same period. And then France and other have had small increases. So pretty much all of the growth is coming from South Korea. And now, about half, I think a little more than half of their total revenue comes from South Korea. And that leads me to believe that their revenue is highly concentrated with Hyundai and Kia, which are both, customers of SoundHound. And they haven't really had as much success, with other automakers or with fast food. That's why revenue has actually been declining in Japan, US, and Germany. So their relationships with Hyundai and Kia are really important. So that is the revenue has indeed been growing. If you look, so in 2021 they made about 21 million of revenue. In 2022, this increased to 31. So it is very nice growth. And then in the first 9 months of 2023, revenue continued to grow. So that does look pretty good. But they're also losing a huge amount of money, a massive expenditure on research and development every quarter, and this has led them to post, enormous operating losses despite their revenue growing. And part of the reason I believe why their R&D is so high and why their losses are so large is because the AI voice assistant market is extremely competitive. Um, as we showed earlier, Amazon Alexa does automotive voice assists. Toyota is making their own voice assistant. Um, and then there's that other company, Cerence, which also plays in this market. So there's tons of different there are multiple different competitors making these AI voice assistants. So because of that, you have to spend a huge amount. A company like SoundHound has to spend a huge amount of money on research and development as to stay competitive with all the competitors. And this competitive situation is probably only going to get worse going forward, given all of the hype around artificial intelligence over the past few years, or really the past 2 years. There's been a huge amount of venture capital funding pouring into AI related startups. So, according to this article here, AI companies raised $50 billion in 2023. So, it's probably safe to assume, because voice assistance and voice speech recognition is one of the kind of main applications of AI. It's probably safe to assume that there's going to be, going forward, even more startups getting involved in this market, funded by venture capitalists, which is going to make things even more competitive. So SoundHound is in a very competitive space, and that's why they've been losing so much money. And if we look at their stock price, so they went public via SPAC, and so the SPAC price was $10. And as over the past couple of years, the stock price got to as low as $1.70, and that's because people started realizing, this company is still a far way off from making money. It's a very competitive market, and it's not really. And also, while the revenue has grown, the revenue growth has massively underperformed the projections that SoundHound made in their SPAC. So it's been sort of a disappointment for investors, which is why the stock lost more than 80% of its value as of February 2nd, when it got down to $1.70. But then with this Nvidia 13F, which showed that Nvidia owned $3 million of SoundHound, which is tiny, and that was just from their 2017 investments. I don't really see how this Nvidia news should have any impact on the fundamentals of the company when this investment happened all the way back, many years ago, and it should have been well known to the market because it's been disclosed publicly. And then the next company is NanoX Imaging, and this is sort of a similar situation. It IPO'd back in 2020, and the stock price declined massively. Down to as low as $6, below $6. Then when this Nvidia 13F comes out, the stock more than doubles to $13, and we don't know exactly when Nvidia made this investment in NanoX, but it was probably a long time ago and probably before NanoX went public. And the reason I believe that is because currently Nvidia's stake is only worth $38,000. So I would think that when Nvidia made the investment, it probably would have been, much greater, in the millions or tens of millions of dollars, because it wouldn't be worth their time to invest a few $100,000 into a company. So the fact that it's only worth $380,000 now most likely means that Nvidia's cost basis was much higher, and they've incurred a massive loss on this position. And in fact, it's possible that they made this investment while the company was still private, and then they've been diluted a ton, and then now the stock price has continued to fall since it went public. So now Nvidia's stake has declined to just $380,000. So it's such a tiny stake. Their investment in NanoX probably happened a long time ago. So again, similar to SoundHound, I think the massive doubling in the stock price just because of this Nvidia disclosure is completely unjustifiable. But let's dig down deeper and look at what NanoX does. So NanoX, they IPO'd in 2020, and they make something called the Nanox Arc. And this is an X-ray machine that they say it costs them $10,000 to produce their Nanox Arc, compared to $1 to $3 million that it costs to make a CT scanner. And the CT scanner, that is basically what they're competing with. They're saying we created this Nanox Arc, which only costs $10,000, while the things that it would replace, the CT scanners already on the market, are way more expensive at $1 to $3 million. In addition, they've also developed some artificial intelligence stuff that can supposedly help analyze the X-ray scans um, to identify morbidities and such from the X-rays. They finally gained approval for the Nanox Arc in May of 2023, so that would be in the second quarter of 2023. Previously, they also did some other stuff and generated, a tiny amount of revenue, like $2 million a quarter. But they've had, negative gross margins, and that's not really an important part of the business. Really, the important part of the business is the Nanox Arc. So it just got FDA approval in the second quarter, and then in the third quarter, the revenue actually declined a little. So it looks like, the opposite of what you would have expected, given how great this machine supposedly is. The revenue should have increased. Now it's possible that, after it gets FDA approval, there's still some lag. Like, it still takes a period of time for their salespeople, talk to hospitals and close deals to sell these machines. But it still seems, if this machine was really so good, and so much cheaper as they claim, why are they not seeing any increase in sales in the quarter after it's launched? So that's one thing to be concerned about. And the other thing is, in general, a lot of these companies that make some new medical device that they say is, miraculous and, way better than the alternatives. When the rubber hits the road, a lot of the times they don't match up with expectations. So a few months ago, 5 months ago, actually, we made a video about a different company called T2 Biosystems, and saying that, it was about to go bankrupt. And since we made that video, the stock has declined by 80%. I think they were able to do some equity raises to get a bit more cash, but I mean, it's still on the way to bankruptcy. And T2 Biosystems, they're a little bit similar to NanoX and what they're promising. So they made this E. coli testing machine, which they say could, test blood for E. coli way cheaper and way faster than existing products on the market. And so they launched it all the way back in 2014. And despite all their claims that their machine is so much superior, their sales were very lackluster, and they always had negative gross margins, and the business, is now on the brink of bankruptcy. So just because, some medical device company claims that they have this, miracle new technology, which is way better and way cheaper than everything on the market today, a lot of the times, the machines, the performance isn't as great as, they're trying to make you believe. And then when it does hit market, it underperforms expectations. So, I mean, I'm not a medical expert. I haven't tested one of these NanoX machines, but you should always be skeptical with these medical technology companies. And similar to SoundHound, investors sort of realize this is sort of a failing business, or it hasn't really worked out. But then just because of this, Nvidia disclosure of owning a minuscule $380,000 stake, then the stock doubles. But that's, I guess, the most ridiculous aspect of this story.
Yeah, I feel like for me, the biggest indictment on these stocks is the fact that, like, it's not new information that Nvidia had invested in these companies, right? It's
Well,
just
I think for
people.
NanoX, it might have been new information because I like tried to find online. I couldn't find anything previously disclosing that Nvidia had invested. I might be wrong about that. There, like maybe it was disclosed publicly, but I just didn't see it. But SoundHound definitely was um, definitely was disclosed previously. Like, see, this is an article from 2017 talking about the investment.
Mhm. So that just shows that, it's just a market awareness thing rather than a actual, something really good about this company's fundamentals.
Yeah, and I also think it goes to show sort of the depths of the sort of AI frenzy that the stock market has experienced over the past year or so, with like so much hype around AI and Nvidia. Anything that any company that appears to be associated with Nvidia, investors automatically get all excited about it, and then you get that kind of leads to crazy sort of nonsensical situations like this.
Yeah, FOMO investing and whatnot.
Yeah. So I think that's about all we had to talk about as far as these AI penny stocks. And just one last thing before we sign off. As a lot of you might already know, we operate a website called differentiatedanalytics.com, which has a ton of investor resources, including original short reports that we write. And we've also added just recently a Discord server. So paying subscribers to Differentiated Analytics are able to join the Discord community, including recommending video topics for us to cover on the Broken Business Models channel. So if there's like individual stocks or industries that subscribers want to see, we will make they can recommend them in the Discord channel, and then we will make videos about those. um, and also, in addition to being a paid subscriber, you can also sign up for an account for free, and that has a few other completely free resources, including a running list of all active merger arbitrages on major US exchanges. That part is available for free. So make sure to check out differentiatedanalytics.com, our website. The link is in the description below, which has both free and paid resources for investors. With that being said, I think that is everything for today, and we'll see you all on the next one.